So many retirees today are concerned about the decumulation phase. For example, when you start working, you start saving, you have your 401k, you have your IRA, you have your investment portfolio, you work your whole life, you save, and then you retire. So you have this accumulation phase, then you have this decumulation phase. It's the decumulation phase that causes people to panic. The panic is there because they are worried about running out of money before they run out of time. So what I want to share with you today is the Perpetual Retirement System. This is a system that I created after many years of personal frustration of how do I save and invest, and then ultimately how can I retire? My concern is how much do I need to live? And how much do I need to reduce my portfolio by without ever running out of money? The problem is in retirement, it's hard for us to wrap our head around actually decumulating assets. We've accumulated them for so many years. Now we have to decumulate them, and that's a difficult thing to do. So there's a psychological impact. But what if we could change and flip the traditional retirement plan on its head? Instead of saving and then decumulating, what if we saved and then decumulated, but at the same time accumulated? So we're building assets while we're also drawing down those assets. I want to show you what I mean by that in what I call, again, the perpetual retirement system. So let's go ahead and take a look at that. Enter the perpetual retirement plan. We have here is a simple process that I created actually for myself because there was nothing out there like it. And I wanted to understand how could I accumulate assets while decumulating in retirement. So I've accumulated for many years and then ultimately decumulating, but I also at the same time want to accumulate, which is completely opposite of what we've been taught in traditional financial planning. So what I want to look at here is what does it take and how do we do that? So we have our traditional plan. Our traditional plan is to have our portfolio, our IRAs, our retirement accounts where we're going to draw income from, as well as Social Security. So in this example, you'll see here on the dashboard, we have a liquid net worth of $1,374,000. This is investments that this particular individual has. Over here, they also have a total net worth, including home equity, of $5,674,771. So what we're going to do is look at the income situation, and we have Social Security of $2,500 that is going to start at age 62, and we have Social Security at 63 here of $1,100. That's going to start at age 63. Our investments, I just lumped them in here as a brokerage account at Fidelity of $1,300,000, and we're estimating about 6% annual rate of return on that. So we're trying to be a little bit conservative with our investments, and so we'll take a look at that. Now, what the two things that I would encourage you to take a look at in terms of your accumulation and retention of your portfolios. You want to accumulate more while you're decumulating and increasing that asset base over time or prolonging the life of your current portfolio. There's two things. Number one is a reverse mortgage. So looking at a traditional reverse mortgage or jumbo reverse mortgage as an option. Now, there are many misconceptions around reverse mortgages, but using it as a financial planning tool to prolong your portfolio is one of the best things you can possibly consider doing. The other thing is Bitcoin. Bitcoin has an asymmetric return of well over 30% per year, and we're only talking about a small basket, a very small piece of your portfolio going into that. Now, this is not financial advice. This is just something that I do, and I want to share with you what I have done. And this is just an example of what you can do. So let's take a look at investments. We have that lump sum in here, and then we have housing wealth. So we enter in our housing wealth, and we look at how that might look over time. We have $4.3 million that is a home value that we have free and clear. Now, the guardrails is where we say how much we want to spend. So let's say we have a $1 million, $1.3 million portfolio. $16,000 is what we need to spend per month. Okay. We have a house in say Washington State, another house in Arizona, and we travel back and forth. We have grandkids. We take them on cruises. We want a lifestyle to make memories, and we want a lifestyle to have in perpetuity the funds to be able to do that. So at 68, we have 2,500 in Social Security, 1,100 as well. Total income coverage 3,600. So we're $12,400 short. If we run this out, we're going to deplete the portfolio by age 79. Let's take a look at our trajectory here. You'll see we have guardrails to protect us so that we don't go above, or if we are below, we can expand our spending if we want. But just to give you an example, we have an investment portfolio in the green that's depleting over time. So by age 79, we're out of money. What if we added the two things I recommended? Again, not financial advice, but I recommended for myself and do this. So what you might want to look at is how do we prolong our portfolio so that we can draw this down and also accumulate at the same time. So let's say we went back to our housing wealth and we look at a reverse mortgage. So what we're going to do here is we're going to run the calculation and we're going to see that we have $1,879,000 in total proceeds. We have an initial line of credit, $469,775. That's cash that we're going to receive, which we can do whatever we want with. They're tax-free. So we're just going to add it to the portfolio as a money market fund to earn interest on that. And then we have a line of credit balance of $1,409,000 that we can draw on. So our remaining equity here is $2,420,000. So I'm going to add that to use these results in the financial guardrail section. And then what else I'm going to do is I'm going to go to, save that, I'm going to go to Bitcoin strategy. I'm going to take a couple $100,000, let's call it three. I'll call it three. So that's $224,000 worth of Bitcoin. I'm going to buy 3 Bitcoin. Today's price at the time of this video is 74,000. And you can use any kind of rate of return that you want, a custom compounded annual growth rate or power law. Power law is what most people think the trajectory of Bitcoin will be over the next 10 to 20 years, which is 35%. But we're going to be conservative here. We're going to say, you know what? We're going to do custom, and I'm going to say 15%. Obviously, 15% is good, very good. But we're going to project that out. And by age 95, you can see we have 9,776,000 in Bitcoin value. So I'm going to go ahead and save that. If at every time you want to check your retirement readiness score, you can take the quiz here and have certain results. And also back on the housing wealth, you can take a look at, if you want to speak with a reverse mortgage specialist to dive into your numbers a little deeper, you can click on that and speak to me or one of our retirement mortgage specialists. So let's go ahead and take a look at the financial guardrails now. And let's see if we take this, we're still, our portfolio is going to be depleted by age 95 now. You can see here we have a line of credit that we're taking $7,500 a month from. So if we look at our spending and guardrails parameters, you'll notice here we have, again, our lifestyle goal of 16,000, and we have here 2,500, 1,100, so 3,600 in Social Security. And now we have a reverse mortgage line of credit that's going to feed us $7,500. So now our pressure on our portfolio is $4,900. That's all we have to withdraw from our portfolio of 1.3 million every single month. And if we do that, coupled with now the reverse mortgage, instead of our portfolio being exhausted at age 79, it now lasts to age 95, which is perfect. So what we could do is consider selling or borrowing against our Bitcoin at some point in the future. Let's say, if you look at the graph down here, you can see the portfolio at this point is starting to go down and the Bitcoin is really going up. So the legacy that we would leave if we didn't access any Bitcoin would be, gosh, zero money in our portfolio, but almost $10 million in Bitcoin value. All right. So that's the legacy. You use your portfolio and use your Bitcoin for the legacy and for your estate. However, if you want to take some of that money out, maybe you decide instead of at age 65, you'll start drawing at the same time. Let's say we start drawing $100,000 in Bitcoin at age 68. Okay. So now what does that do to our portfolio? Now you can see here at age, let's do this at age, let's do this at age 70, 75. Give us a little bit more time for that Bitcoin to mature. We don't want to buy Bitcoin and immediately start selling. We want to buy it and hold it for 5 to 10 years before we start to access it. Ideally, 10 years. Um, Bitcoin has a very volatile nature, and so we want to make sure that we hold on to it long enough for that volatility to pay off. So let's take a look now, and the plan appears to be on track, no problem. We have here at age 68, we're still pulling out 4,900, but at age 75, now we have plenty of income from the sale of our Bitcoin sales. But now what this is telling us is we could continue to have a bigger lifestyle. So at age 75, what we could do is increase our monthly spend from 17 or 16,000 a month to 23,000 to maximize our lifestyle. So we have an additional $7,766 in untapped headroom above our current goal. Maybe this particular person wants to start being more philanthropic and they want to start giving. Maybe they want to give to their grandkids or their children, really help them where they need it most. So, with this strategy, two things you add to supercharge your portfolio is leveraging your home equity, integrating that into your overall retirement plan, and also purchasing a little bit of Bitcoin. Now, this is something that you can consider doing. I'm not advising you one way or another. This is for informational purposes only and is strictly for you to play around with. So take a look at this perpetual retirement. You can go to perpetualretirement.com and put in your own numbers and see how the numbers shake out. So that's all we have for you today. If you have any questions, feel free to click below in the comments. Let me know what you think. Let me know what you think of the strategy of using home equity and integrating Bitcoin as well into your retirement plan for its longevity. Obviously, the proof is in the math. So the math doesn't lie. And so hopefully that makes sense. And we'll talk to you soon.